as gold goes higher, which undoubtedly it will, I mean, just look at any chart. Look at the chart, measured in dollars, and then look at the chart of the gold's trade weighted index. I mean, that's on a death cross. So the dollar's going down, reflected in gold going up. As gold goes up, if you like, on that basis, then I think that silver is going to be like gold on steroids.
Mm.
It usually has this relationship that when gold rises, silver rises approximately twice as fast. When gold consolidates, that is the moment when silver is weak. And that's exactly what we're seeing at the moment. But the moment gold gets away from the $2,500 level, again, because the dollar is going down, then I think you'll find that silver will go off like a scalded rabbit. I mean, it really will.
Alasdair Macleod is a noted economist and head of research at Goldmoney. He specializes in monetary theory and precious metals and is widely recognized for his insights on gold, silver, and the global economy. Macleod asserts that silver typically outperforms gold, rising nearly twice as fast when gold climbs. Silver is weak as gold consolidates, but Macleod predicts that once gold breaks past $2,500, driven by a declining dollar, silver will surge rapidly, poised for a sharp move. This aligns with the current situation, where gold faces resistance from the US dollar at the start of the week. The Greenback has rebounded from its year-to-date low last Tuesday, when the US dollar index hit 100.52. As a result, gold is trading in a narrow range between $2,500 and $2,531. The short-term trend could be characterized as sideways, and is more likely than not to continue fluctuating until a breakout occurs. Macleod highlights that silver is currently priced as an industrial metal. The gold-silver ratio in the 1980s was significantly higher than the historical 15-to-1 ratio when silver was used as money. This indicates that silver is undervalued compared to gold. Recent fluctuations in the gold-to-silver ratio have been a significant factor behind the weakness in silver markets. At the end of May, the ratio fell to 72.74 before stabilizing around 77.50. Recently, it has gained momentum, rising above 82 and now standing at 88.1. Reflecting an increase of 0.62 or 0.7061%. This upward movement in the ratio has contributed to the bearish trend in silver markets, supporting Macleod's view that silver is mispriced relative to gold. Before watching this video, please subscribe to our channel, hit the bell icon, and share it with anyone who might benefit from it.
At the moment, it's priced as an industrial metal. I mean, you've only got to look at the gold-silver ratio, which currently is in the 80s. Compare it with the days when silver was accepted as money. As a monetary standard, it was the relationship was around about 15-to-1. So it's not priced as money at all. If it was priced as money, it would be a lot closer to that 15-to-1. Now, silver is still accepted as money, if you like, in practice, virtually everywhere in the world, if people can get hold of it. The system doesn't recognize, our system doesn't recognize it as money at all. In the EU, for example, they charge VAT on silver coins and silver bullion if you take delivery. It is, I think, as an industrial metal, cheap anyway, because it's been in supply deficit, according to the Silver Institute, for the last 4 years. Well, this is the fourth year of supply deficit. Now, I just can't see in this current situation how any accumulated stocks, say by the Chinese or whoever else has strategic stockpiles, I can't see how that's going to be released to try and suppress the market, because you send silver into the market, it just disappears. I think that the bullion banks are trying very hard to get out of their short positions. I mean, the thing that's fascinating is that if you look at COMEX, look at the open interest on COMEX. It's within about 24,000 contracts of the all-time low. I mean, when I say all-time, I mean, I've only got statistics going back to 2006, but that's all intents and purposes. They've managed to reduce their position in silver to that extent. It's getting increasingly difficult to see how they can reduce it anymore. And the interesting thing is that in the last 2 months, they have been reducing their exposure in terms of the number of contracts, but the price has been rising. Now, I know in the last 3 days, it's fallen, but that's just volatility. This is, if you like, the symptoms of an enormous systemic squeeze in the early stages, I think, in silver. Now, as gold goes higher, which undoubtedly it will, I mean, just look at any chart. Look at the chart, measured in dollars, and then look at the chart of the gold's trade-weighted index. I mean, that's on a death cross. So the dollar's going down, reflected in gold going up. As gold goes up, if you like, on that basis, then I think that silver is going to be like gold on steroids. It usually has this relationship that when gold rises, silver rises approximately twice as fast. When gold consolidates, that is the moment when silver is weak. And that's exactly what we're seeing at the moment. But the moment gold gets away from the $2,500 level, again, because the dollar is going down, then I think you'll find that silver will go off like a scalded rabbit. I mean, it really will.
Gold has reached a record high of $2,525 per troy ounce, reflecting a more than 20% rise this year. This surge is primarily fueled by expectations of lower U.S. interest rates, with the Federal Reserve anticipated to cut rates next month. As gold continues its long-term bull market, it shows strong potential for further gains in the months and years ahead. Central banks also increased their gold reserves, highlighting their crucial role in the global financial system. Alasdair Macleod notes that Western financial markets remain indifferent to gold's strong performance and reaching new highs. He finds it unprecedented for an asset to surpass previous records without significant investor interest. Furthermore, Macleod points out that mining stocks are neglected despite gold's potential to exceed $2,500 not being reflected in their valuations. This contrast highlights the current market anomaly. Let's get back to the interview.
We like to believe in efficient markets, but the markets are not efficient. They are interfered with by the authorities hugely. I mean, interest rates being the primary weapon, if you like, of choice in terms of managing markets and market expectations. But I mean, just look at, gold is hitting new highs. What's the interest in Western financial markets? None whatsoever. I mean, it is extraordinary. I don't think I've ever seen a security or anything like that entering new high ground, not just recovering, but new high ground with no investor interest. So what's going on? This is crazy. If you look at mining stocks, I mean, they've been left way behind. There's no interest in them whatsoever. I mean, there are a few funds are beginning to sort of nibble, if you like, and sort of invest in some of the the big established producers. But there's absolutely no attempt to discount gold going to 2,500 and looking like it's going higher. The markets are completely broken. So I would not look to markets to value things, to discount things according to theory, which they should be doing, but they're not. They really are not. And the amount of propaganda coming out of the West about Ukraine and Russia and all the rest of it seems to have completely misled everybody in markets. There's no acceptance, if you like, of risk that's going on. I think if there was a sudden concern about what was going on in Ukraine, Russia, and all the rest of it, I would expect to see the euro being sold down very heavily for dollars, at the very least. No evidence of that at all, none whatsoever. The dollar, as I said earlier, has a debt to GDP ratio in excess of 130%, and it's going to go worse than that. Let's put a little bit of gloss on it. The Chinese are sellers. Now, it's important to note that they've been buying gold, but they're not really buying gold. What they're doing is they're getting the hell out of dollars.
Gold is poised to continue its upward trend, potentially reaching new highs, buoyed by expectations of lower U.S. interest rates and increased purchases by central banks. Silver, known for its greater volatility, has yet to benefit from gold's recent advances fully, but stands ready for substantial gains if gold breaks through key resistance levels. The fluctuations in the U.S. dollar play a crucial role in influencing gold and silver prices, with anticipated rate cuts likely to boost gold's value further. What are your predictions for gold and silver in the coming months? Do you think gold will keep climbing? And how do you see silver's performance shaping up? Share your thoughts and insights in the comments below. We'd love to hear from you. If you enjoyed this video, give it a thumbs up, subscribe to our channel, and hit the bell icon for the latest updates. Thanks for watching, and we'll see you in the following video.